And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to this week's Market Update. I am Jim Beach with School for Startups Radio, as always with Dale Gillham from wealthwithin.us. Dale, how you doing today? I hope you had a fantastic long weekend.
Well, I don't have a long weekend here in Australia, but we do have Black Friday, which my wife said to me on Saturday. She goes, Dale, you coming shopping with me? I said, not in your life. I'm going anywhere near a shop this weekend. You go on and spend whatever you like, but I'm not going with you.
Well, you know, so much interesting news about Black Friday last week. The news Friday afternoon was that Black Friday was a complete bust here in the United States. I don't know what you're hearing, but the news here was empty stores with pictures of empty Macy's. And I was so interested that I did the unbelievable, Dale. I actually went to the mall Friday afternoon. It was empty, not empty, but not busy at all. And I finally found some data. I've been looking all weekend about the foot traffic. So I know we were going to talk about online sales, but I think foot traffic is interesting as well. Down 6.5% according to the Wall Street Journal. What are your thoughts?
Yeah, foot traffic was down in all of the shops from the research that I've been doing, but online spending was way up. And what a lot of people seem to be doing, I mean, obviously the statistics are still coming out now, but what a lot of people seem to be doing was letting their fingers do the walking on the keyboard and the mouse, buying things and then going just picking them up at the actual physical bricks and mortar store. So whilst traffic in the stores was down, sales were up. I think shoppers spent by the last time I checked, around about 4.2 billion, I think, from the Friday, possibly into the Saturday, and they're looking at something like over 7 billion, or they're on track to get over 7 billion, which was about 14.5% increase from last year, and a record high. But I was getting some statistics from Adobe Analytics at that time, because that was the one I found a little bit more reliable to get some stuff on, but they are on track to hit 7.4 billion. But also, the other interesting thing that I read was that nearly half of the revenue on Thanksgiving Day comes from smartphones. You know, people buying on their smartphones, which is about nearly a quarter, up 24% increase from last year. Now, obviously, I'm not sure about you, matey, but I have trouble reading the screen on my smartphone with my eyes. So it must have been people under 35, I think, looking and buying a whole lot of stuff online, which makes sense as why retail sales are up on online shopping rather than bricks and mortar. Maybe the people like you that are over 35, you're only just over 35, but those ones like myself, we prefer to walk into the shop and have a look and try them on, while maybe the younger people are online buying. But we did see some really good increases from our those e-commerce giants. You know, they saw huge increases, and they're up over a couple of 100% in sales, and smaller retails a big jump as well, around about 61% according to Adobe. So looking really good at the moment.
It is, and I saw the same data that you did for the online sales, up about 15% or something like that. So it will be interesting to see how the two numbers coalesce together, and if we get a positive bump for the overall weekend today. Do you think we are going to get a couple of points increase over last year in terms of spending? I think that would be pretty important for the economics, the politics, the elections coming up. I think that's an important number. What do you think? You think we're going to get it?
Oh, look, I think we're definitely going to get it. I mean, we're seeing the signs at the moment with those reports earlier, because, I mean, right now we haven't seen all of the figures for this weekend. But we're still, also, we've got to remember we're at the start of December and Christmas. And I know you've done all your Christmas shopping. And I know last week you said you weren't going to spend any more money. But again, you went to the shops on Friday afternoon. So you did spend some more money. So you've done
I'm going to spend some more money. You're right. I am. I'm going to blow past the budget, you know,
Yep.
but
and we're still
I
got
have
the
the
busiest
spirit,
shopping
though,
days
Dale.
left. That's really, really awesome. I do have a little tree on my desk as well, so I'm with you, matey. But we've got to remember we're still to yet the busiest shopping day before Christmas. So we haven't had that yet. So a lot of people, unlike you that have pre-planned and you've done most of your Christmas shopping, a lot of people leave it to the last minute, especially people like me, because I hate shopping at the best of times. I try and stay out of them. But we are getting to that point. So I think we're going to get some really good retail figures out for November, but I think we're going to get some really good ones out for Christmas as well. And later on in the report, after I finish with you, I'm actually going to go and look at retail stocks, and I've got charts of the big retail stocks. I'm looking at Target, I'm going to be looking at Macy's, I'm going to be looking at Coles, and I'm going to be looking at TK Maxx. Another one that's because Target and TK Maxx have been doing really well with bricks and mortar stores and online, and they're really taking it to Amazon, and that's why we're seeing some really good moves on their stock prices at the moment. But I think Macy's is looking a lot better from a technical point of view on the charts, and so is Coles. So they could be some nice little good stocks to buy into for 2020. So I'll put that on the end of my report.
Well, I always enjoy the things you do after I get off. I guess your best work, Dale, is done after I'm no longer on the show. But I can tell you, Target has great, unique merchandise. It's presented better than Walmart, and everyone I know shops at Target, not Walmart. I think that Target has really, really developed and created a unique, defendable niche. And I enjoy that experience much more than the Walmart experience. So let's move on.
Go ahead. Before we move on, probably a month or so ago, or 2 months ago, we talked a bit about Target. And I said to you how it was a Geelong company from where I was born here in Australia. And you go, I thought it was a US-based company. And we're both right. So I did the research on that because it kept worrying me about why we're both thinking that. Well, Target is a store in Australia. It has the same logo, same jingle, same everything as what the Target in the US, but they're completely separate companies.
Really?
Absolutely, yeah. And so we were both right. They changed their name to Target back, I think, in the early 60s, or the one in Australia, but they're completely separate ownership, separate companies, just having the same logo and same jingle. So they look essentially the same.
Well, I'm surprised that the U.S. Target allows that to happen if they have a good, universal copyright. But anyway, yeah, the Target company I thought was owned by Dayton Hudson Corporation, the same people that Dayton, Ohio is named after. Senator Mark Dayton, for example, out of Minnesota, or Minnesota or Illinois, the Dayton family. But anyway, I went to school with one of the kids, so I've heard the whole history, believe me.
Fantastic.
Yeah. Talking about third generation wealth going to waste. Let's talk about a different pile of money. Let's talk about Warren Buffett, $125 billion sitting on the sidelines, and he's not the only one. Apple, $250 billion. A lot of the FANG companies sitting on hundreds of billions of dollars. What are your thoughts?
Yeah, I thought I'd do a little bit more research on it since you brought it up last week or the week before, and I thought I'll have a good look at what's going on here. Now, Buffett hasn't really bought a stock roughly in about 4 years because, as you know, he sort of buys stocks that are low in price but good valuations, and he buys stocks for forever, basically, or what he talks about, don't buy a stock unless you're going to hold it forever. Now, that doesn't mean Buffett doesn't sell. When the metrics change on a good company, Buffett will sell down. But he does have $128 billion to spend. But right now, he would believe prices are sky high for businesses that possess the decent long-term prospects that actually Buffett talks about, because that's what he was saying to the media in his most recent annual letter. So he thinks prices are a bit too high for him because he's basically as Buffett says, buy in doom, sell in boom, and we're not in doom anymore. So that's why he's saying the prices are a bit high for him. He's looking for the market to come down and looking for some of these great stocks to come in and buy. But in that annual letter out to investors, that's what he was saying. But he repeatedly said that the premium for buying companies outright has gotten too rich for his liking, partly due to the competition from private equity companies. So, but to me, it's always about, you need to wait for the best buys, not just buy. And I think a lot of investors just have money and they go and buy something that looks good, or they've seen an announcement, or they've read a report and they go and buy. But to me, sometimes it's far better to keep your money in the bank and wait for the better buys. And what I mean by that is, you get into a company that might make 10% in a year today, or wait for a little while and get a company, wait for 6 months and then buy a company that makes 40%, you'll still make more money on that by waiting for 6 months. But a lot of people have that fear of missing out, and that causes them to make rash decisions. They see Target move up and they go, wow, I'm missing out on that, I'll jump in. But then they jump in at the end, and so they do what most investors do, is buy at the top rather than at the bottom like Buffett does and what I do. And I buy a lot of stocks. And Macy's, that I'm going to talk about a little while, and Coles, they're at their bottoms right now and they're looking much better. So these might be on Buffett's list. I don't know. He's not saying that. But end of the day, the aim is to buy low, sell high, not buy high and sell low.
I don't think there are many fund managers that could justify sitting on the sidelines for 4 years and get away with it. I've heard Warren Buffett say that to decide to do nothing takes just as long as just, decide to actually buy something. And I got to tell you, we here in Atlanta really appreciate Warren Buffett. He's a huge shareholder in Coca-Cola, of course, and in Norfolk Southern, which is building their new corporate headquarters here in Atlanta and investing about $500 million in bringing several hundred jobs to Atlanta. So, Warren, we appreciate your vote of confidence for Atlanta. Send the rest of the 128 billion here too.
Yeah,
excuse me.
He owns about 10% of Coke, doesn't he? And
yes, he does.
And I was reading the other day that he has 4 Cokes a day. Wow,
something like that. Yes, that is the secret to longevity, Dale. 4 Coca-Colas a day. Yes. Especially if you can get one intravenously, that helps a lot too.
I don't think my wife would let me drink that many Cokes a day, not even one. So.
Well, they are delicious. Let's start to wrap up. We're starting to get a point where we can do some year-long look backs. What are some of the great markets for the past 11, 12 months, and what are your thoughts on the year in reflective?
Yeah, I always like this time of year just to reflect on what has happened, because it shows you where the money's going to flow into the next year, because money ebbs and flows as fund managers that readjust their portfolios. But so far in 2019, the S&P 500 was up 25.3%, of the Dow just a little bit lower, down at 20.25%. In November, the Dow was up 3.72 and the S&P 3.4. So that's a really strong sign for this time of the year, because remember, October is generally, October, November area, we normally get a bit of a dip into it. So that augurs well for December going on. And I think if the market keeps moving and we can get sort of 1.5% in December, then the Dow will go through to the S&P going up to, the Dow 29,000 on the Dow and about 3,300 on the S&P will occur this month if we just keep going, but not quite as the same pace. But I think the momentum is actually there. But when we look at the best sectors so far in 2019, technology is 41% for technology, industrials up 27% and financials 26%, all beating the Dow and the S&P. So looking at stocks in those areas where the worst sectors, and this is the one I love to look at as a fund manager and as a trader myself, is looking at the worst sectors, because they've been unloved all year and eventually they're going to get some love. And right now the worst sectors are energy, which is up only 1.8%, and healthcare up 14.73%. Materials is up 18.43. So energy and healthcare, there would be opportunities in those two sectors for me, because healthcare especially, you're getting aging populations, you're getting a whole range of different issues around there. Healthcare is always an issue, and companies in healthcare will always make money. So I think if they've been unloved in 2019, there should be some good. But I also looked at the FANG stocks because they're technology, and I thought I'd share with you a little bit of what's going on in technology. Apple,
Please.
69% rise, Apple for this year. Amazing rise. Facebook's up 53.82%, and Google, or Alphabet, is up 26%. But Amazon's only up 19.9%, which I mentioned before. So, maybe that's an opportunity there into technology. Netflix is only up 17.5%. Mainly because of obviously the Disney news and obviously Apple Plus. I mean, I subscribed to Apple Plus the other day so I could watch that new show with Jennifer Aniston on, and did that over the weekend watching. And I thought that was really, really good. So there's more competition for Netflix. But, we might to see there might be some opportunities there. But for me, for 2020, healthcare and energy. So that's where I'm at. In those areas, but I might have a look at some stocks in that and share them with you guys over the coming weeks.
Do that, please, especially in the energy sector. I would be excited to hear your thoughts there. For a sector to do so poorly when overall energy production in the United States is so high, and of course we have the Aramco IPO coming up next year, if that happens as well, so that'll be fun to talk about. I'm going to short Apple. I'm going to short Facebook. You don't go up 70% with nothing exciting to talk about. Apple doesn't have a new product. There's nothing new in the pipeline there. I'm not excited about the new iterations of their product. I'm going to short Apple, Dale.
Well, you do your best, and so I'm right. I'm of the opinion if something is bullish, then you need to assume it will be bullish until it's not. And right now, Apple's bullish to me, so I wouldn't be shorting myself, but I'd wait for it to start to fall away. Because a lot of people, they go, I think it might do something, and that's trading on speculation. When something is doing something, that's trading on confirmation. So I always let stocks slip from the top before I start exiting or trading short, and I let them rise from the bottom before I start trading long. And so that's really, I'm trying to capture the big chunk in the middle, and that's really the safest chunk. And so shorting bullish stocks is not something that I recommend. So I think you and me need to have a chat offline.
Yes. Well, I just don't see it continuing to go forever. Eventually it does come down, and I think that they have had their run. I'm the same with Netflix. I think that you getting Apple, and I got the Disney Plus this weekend, and by the way, it's great. We love it. 100% satisfied with that. Some of us are going to start canceling the Netflix. I've watched enough Netflix. I'm kind of tired of it. So
I think that's what you might see. I do have Netflix as well, so yeah, and so that's what I would be looking at. What do we keep? Because right now we all have a lot of subscriptions, and I know I cancelled a whole lot in the last 12 months of subscriptions you might use once a month or whatever else, and I think I'm just trying to simplify life, if that makes sense. So but I'm trying Apple Plus. I might try Disney Plus as well, but right now I've got Netflix as well, so only time will tell, mate.
I'm not sure you're in the Disney demographic anymore, but we are still here at this house.
Well, that's probably true.
Yes. Let's wrap it up, Dale. We got to move on. Up or down for the week. What do you see?
Oh, look, I think the market's going to go down either this week or next week, but I wouldn't be surprised if it edged a little bit higher this week. But I do expect 1 or 2 weeks down this month, so which could be this week or could be next week. So right now, I still think the market's bullish.
Dale Gillham, everybody. You can find him at wealthwithin.us and on Amazon at Accelerate Your Wealth. It's your money, your choice. Dale, thanks for being with us, and we will talk to you again next week.
My pleasure, Jim.
Thank you. Have a great week, everyone. Talk to you the next time.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Now, the Dow continued on last week in its nice little bullish run, and I think the Dow, it ended up November about 3.7% up for November, which is a really good run on the Dow. December is now upon us. We're now in the first few days of December, and again, the market is looking really, really good. Now, if we can, the Dow does move up and maybe 1.5 to 1.8%. There's some really good movement that can be had on the Dow. So I do think it is bullish for December, and I think it's going to be bullish going on into the new year. But let's go and have a look at the chart and see what that says. So on the screen at the moment, I do have a weekly chart of the Dow Jones, and you can see here how we've had this nice, beautiful move right up through here and really through that resistance that I was talking about a little bit about the other week. But we've had, since this low back in October, we've had 1, 2, 3, 4, 5 and last 6 weeks up. So we do probably need to see 1 week down. So we're going to get a 1 week down either this week or next week, maybe get 2 weeks down, but I don't expect much to happen here. But we can see a little bit of indecision towards the end of last week where it came back and closed off its high. The bars are a little bit shorter than longer than these bars. So it just shows the market's still a little bit conservative, but it wouldn't surprise me if we saw 1 week down. But I do think the Dow is heading for 30,000 points, probably sometime between now, well, not between now, but between January and March of next year. I'm thinking the peak on the Dow might be somewhere around February or might be March before it starts to move into a low. It has been excessively bullish, or excitingly bullish, I should say, a little bit more than excessively, but it's an interesting pattern that it makes right through here. It doesn't generally do that too much, and to me, this pullback back into December last year, we haven't had another major pullback, and we really haven't had the yearly low, and that's probably the only thing that worries me about the Dow. We don't seem to have had a yearly low, but that may happen into early next year. But right now, I do think the Dow is bullish. I don't think it's going to crash. I think it's looking really, really nice at this point in time. So let's go and have a look at some stocks. Now, I did mention with Jim that I was going to have a look at retail stocks today. So that's what I'm going to have a look at, because the retail stocks, some of them are looking great. Some of them are looking a little bit average, but there could be some opportunities down the track. So let's get stuck into those. Now, the first stock we're going to take a look at is Target. Now, Jim and I spoke about that last week because Target has performed exceptionally well during 2019, and it does look set to continue. I mean, obviously, last week I did mention that it was up 10% on sales of clothing range, etc., and it is doing really well because it's bricks and mortar and online, and I think that has been really helping it to outperform. It's actually doing better than Amazon. Amazon didn't do as well, or hasn't done as well, and Amazon's one of the FANG stocks, and I think Amazon, from all the FANG stocks, I think it was the worst of the FANG stocks for this year, whereas Target has done exceptionally well. But looking at the chart, you can see how vertical it is on that monthly basis, so it will slow down eventually. When you've got a stock that does that sort of vertical move, it is exciting if you're actually on it, but if you're not on it, you just keep watching it go up. So if you are on Target right now, just be expecting that this sort of big long bar here, and you can see if I put my little price range percentage bar on it, in November it rose nearly 17%, so it will slow down a little bit. It'll come back to more of its normal angle. So if you do hold this stock at this point in time, don't panic on it. I do like it moving forward. It will sustain it, but you can see its longer term angle is here, so don't worry about if it just comes back over a month or two and then starts to move again. But it does look really, really, really nice at this point in time. Let's go into the next one. This is TJ Maxx. This is the other one I do really, really like in retail, because like Target, it's doing really, really well. It's doing well in its stores and it's doing well online. And TJ Maxx stores, I'd only found them myself only a couple of months ago, and I thought, wow, interesting store, good pricing, good range of goods and services, but also that you can, as I said, you can purchase online or you can go into the bricks and mortar store. But right now, this is just a beautiful trending stock, and it is looking really, really strong. If you want to buy retail stocks, I'd suggest this is a good one for you to look at, to put into your portfolio right now. So it is looking, as I said, looking quite nice and looking like the trend will continue in that upward direction. So retail figures, as Jim and I discussed, are good for this Black Friday sale. They're, you know, they're looking at 60% of retail sales to come in December, or from the Black Friday right through to Christmas. So if we get some really good retail figures over the rest of this month, you might see stocks like this and Target continue on in their bullish run. Now let's go and have a look at one of the worst ones, which is Macy's. And you can see Macy's really fell out of bed from this high here back. Where is that one? I can't get my pointer on that one. Back from July 2015. Now Macy's hasn't adapted well to this online world, and you can see here 80% fall on Macy's over the period of time. But look at this basing pattern. It looks like it may be finding some support. It looks like it may start to move up. Now, to do that, it's going to need to get through this sort of mess here at around $16.70 to $17, about mid $17. If it gets through that, that would be a nice looking buy for me on this stock, because it's showing it's not falling away. Because what we don't want to see is one of these rallies here, or these false rallies, or death rallies, or whatever you want to call them, where it starts to move up and falls away. The longer this goes in across here, the more it's going to go up rather than down. But right now it's had one, what's this one, low here, is back in August of last year. So 12 months of going sideways. So this is suggesting to me it's probably going to more break north than south. But don't jump too early. Make sure it's getting above this sort of level here, around 16 to 17.50, that sort of level, before you do get into it. But I do like Macy's moving forward if it does do that. The next stock we've got on the last one, a retail one, we've got Cords, which is another one that really fell out of bed a week ago. And you can see this massive fall. And if I put my little tool on here, you can see the big fall, 20-something% last week. Now, its high is right back here. The most recent high is back in November 2018. And again, if I put my tool on, you can see how far it actually fell. So here's two stocks that have fallen very heavily. Macy's and Coles, both big retailers again. This one's fallen 48%. So it is looking good. Now, all we want to make sure is it stopped falling. And right now, it hasn't proven to me that it stopped falling. And look at this stock. It is quite volatile, up and down over a period. This is a real big stock, but it's also a real big proof why you don't buy and hold stocks. That goes back to July 2000. If you bought it in May, June, July 2000, you pretty much haven't made any money on it other than dividends from that purpose. But right now, it looks like it might be finding some support. If we look over at this weekly chart, and I'll bring that up before we finish, if it holds above these lows through here and starts to move up again, because we're seeing a move up from this low in August right through here till November. So unlike Macy's, it was making higher highs and higher lows through here. So this big one move could be just a little bit of an anomaly. If it holds up and starts to move up, this could be a nice buy in the coming months. Again, looking at stocks that have fallen heavily but are starting to increase again, whereas the other two, the stocks that I looked at, Target and TK Maxx, maybe their runs will come to an end eventually, but right now they do look bullish. I still think they are going to be bullish. These ones could be the ones that have come up in the next 12 months, because market does switch around. They do rebalance portfolios, and if they're going out of some retail stocks that have made good money on, they'll start selling off some of those and reweighting and putting into some stocks, possibly like Macy's, possibly like Coles here. So that's it for me this week. Remember, if you do have a question or you'd like me to look at a US stock for you, then please send your questions in. So just type down below. Now, if your question is on the Australian market or the Australian stocks, then you need to post your questions on my Australian stock market report, not on this one. I won't be doing Australian stocks on this report, and I'll probably be, I won't be picking those up on the weekly basis. So, but thanks for watching this video, and right until the end, I really do appreciate it. It's great to see you there. If you're watching from the US, let me know where you are. Just post below saying, hey, this is where I am. Love your videos, Dale. I'd love to hear where you're from. Again, if you have any questions on the US stock market or US stocks that you'd like me to answer, just stick them below. Get your fingers on the keyboard, start typing, and I'll get to answering those next week. Because remember, I do these US market reports every single week with Jim. So hit the subscribe button now and click the bell on the right of it so that you keep up to date when we go live with our videos and our live stock market reports. But for now, I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.